All right, why don't we get rolling here? Thank you everybody for joining us today. Again, a quick logistics for everybody who's just getting on. There is a Q&A box and a chat feature, and if you ask questions through the Q&A box, it's going to ping me, and we're going to try to get to those a few times throughout the show, and in as much real time as we can. But thanks everybody for joining us, whether it's morning or afternoon for you from around the country for this week's Pro Perspective. We've got a good show today. So I'm the co-host, Matt Kors, here with Crexi. We're zoomed in with Jeff Rinkov with Lee & Associates. Jeff, currently the CEO at Lee & Associates, and he's been in this role since 2013. But more interesting, I thought, is that you've been with the firm since 1997 out of the greater LA area. Now with 60 offices nationally as well as internationally, Jeff's been an integral part in the company's expansion, not only throughout Southern California, but also around the world really since the mid-90s. I know that you all have been around for 40 years, I believe, and yourself and the other brokers that I know, I would say growth and an entrepreneurial mindset is what resonates most with me. And in 2020, you've opened 3 new offices, and I could be wrong about that, but I saw 3 new offices on the East Coast, which I think rings to that mantra. So congrats on the growth and success thus far in a crazy year. And welcome to the show, Jeff.
Yeah, thanks so much for having me, Matt. Great to be with you. Appreciate it.
I know you're busy, so we definitely appreciate the time. How we're going to start real quick. So we've been doing a segment of the week each week, and last week what we talked about was we just asked the viewers a question, what they thought if it was office or industrial has seen a greater increase in viewership on listings on Crexi from Q1 to Q2. The answer was actually office by a couple percentage, but everyone thought industrial. I think because industrial maybe has been so hot recently. Maybe people are looking at office now. Don't know, but we're going to pop a poll up right now for everybody. Have you had a real estate acquisition that's been supported by financing since April 1st? So figure a pretty interesting question for right now. And yeah, everyone should see that coming up on the screen. So please feel free to answer. And if you do want to add any specifics about a deal, feel free to add them into the Q&A box or the chat feature, and we'll get the answers to that in a little bit. But Jeff, let's get into it. So talking today about expanding your business into new territories, I figure maybe, take us back to when it started back in 1997 for you, primarily a Southern California firm plus Phoenix, I believe. So really kind of in the real estate world, kind of an extension to California. But from your early brokerage days, did you see the expansion going nationally as well as into Canada back then, or, really just looking at Southern California and the Western region?
So thanks. I think that was the dream, Matt. That was the hope.
Okay.
Was that we could create enough interest in a unique platform that spoke to a really high caliber broker that we could attract top talent in other markets. So I think the furthest east we went after Phoenix was Chicago, and
Okay.
we had an incredible group. Many of the founders are still there in our Chicago group, and I think Chicago's 12 or 15 years old now, and that was a really big expansion, and that was kind of the anchor for the Midwest and the jumping off point for the East Coast.
That's pretty cool. I didn't realize that was the big one outside of the Southwest. Nice.
Yeah, and in those days, you asked about my experience in 1997. I was trying to figure out how to make my 70th, 80th, 90th cold call. Because I was afraid I was going to lose my runnership in an office that had opened 3 months before I joined it. So I was really micro-focused as a kind of a fledgling, baby industrial broker.
Nice. No, that's very cool. That's a really good story to kind of start with. Would you, and I guess when you think about those early beginnings, would you say it was more due to like clients' needs to grow, or was it the brokers that wanted to expand, or maybe one and the same there?
Yeah, I think it's a combination. So,
Okay.
I think we knew we had client engagement that existed outside of kind of the microcosm of Southern, Central, and Northern California, and at the time Vegas and Phoenix. I don't think we knew how adaptive and how well adopted the platform would be. But I think once we got out into some of the places that we recruited from, and we still recruit from, and we figured out, what type of broker that we'd be appealing to, that their client bases were really much larger than I think we believed.
No, that makes a lot of sense. Yeah, I could see that, especially back then when a lot of things are just growing in general. So that's pretty cool. Was it at the time a full service brokerage shop, sales, lease, management, all different product types, or was it kind of a niche firm and that was also part of the expansion model?
So I think the birth of Lee and Associates, Bill Lee's vision and his experience really resonated mostly with industrial brokers.
Okay.
So I think that was the birth of it. You take a look at some of the growth we had in Ontario, which 25 years ago was not nearly the market it was today. But we did have some industrial and office brokers. And then you take a look at some of the founding people that we have in our Phoenix office, and while we have incredible industrial teams, we also have equally strong office teams there as well. So I think the goal is that we would grow, and I think specializations become so important, especially when you want to diversify and you want to be a national, international, global company. You have to have specialization.
Yeah, that makes a lot of sense. That's for sure. I guess then you kind of piggybacking into the next topic here with the impressive expansion that you have had. I believe around 20 new offices since 2013, since you kind of took over at the helm there, and most recently DC, Boston, and Naples. I think if I got that right. So,
right.
Congrats on that. How do you guys go about new offices today? Is it is there? You're pretty, I think, over 60 totals. There's a lot of coverage already, but yeah, how do you keep expanding that?
Sure. Right now we're 66 offices and 64 in the U.S., 2 in Canada, so Toronto and Vancouver, and likely more to come north of the border. So I'm really fortunate. So I have a great team. We have a very active, interactive board of directors. We have incredible leadership throughout the company. We have a managing director or president role in every office throughout the U.S. and Canada. And so I was able to accept this job with great momentum. I mean, the company was really growing. We had a number of expansion opportunities, acquisition mergers that were kind of lined up that I was fortunate to step in at a really fortuitous time. And then we were able to be successful with those. Great leadership that preceded me. And I think a really great culture that appeals to top level brokers. But we started recruiting, Matt, in places that I think, they're not revolutionary, but we really wanted to be well led and well vetted. And we wanted to have leadership that had really good connectivity and penetration in local markets, because we didn't want to put a flag up and just say that we had, a small office in an important market. So SIOR, CCIM, those have been really successful recruiting grounds for us. And they've also been people that we were already sending business to. And I would say that, so we do a lot of networking at those conferences, at least when you could be in person at a conference and do that.
Right, absolutely.
But what we found, relative to your earlier question, is we were sending business into so many markets, and we were making connections with so many brokers, and whether they were independent or they were working for the top 3 or 4 shops at the time, when they heard what Lee and Associates offered from a platform and what our culture was about, and the entrepreneurial nature, the support of a growing national, international platform, it really resonated with a very certain group. And I think that's how we've been able to achieve growth. And so we're a very collegial group. And I think we're very similar, even though our geographic diversity is really growing, but we're very similar, I think, throughout. And that's been the key for us.
Very good. Very good. Yeah. And I think too, we had a question come in from the audience. You kind of answered it in a way, but I feel like you could maybe put some more stuff there on this one. How does your firm differentiate itself from the other brokerage firms? I think a lot of that you kind of mentioned there, but also probably some other things you could elaborate on.
So it's an interesting question. And so to understand Lee and Associates, you just have to understand a little bit of the basic structure. And I think that's how we're differentiated. So at our core, we are entrepreneurial, and I think we are local. And the locality of it and the penetration locally really also speaks to the need to be collaborative, right? I mean, we have great systems, we have great technology, great leadership, but it's really the relationships that we've built internally. And then the structure, which says that we don't have any debt, We're never going public. We are broker owned locally. We provide a co-investment opportunity of our brokers throughout North America in the growth of the company. And, just as a quick anecdote, so we raise funds internally for that growth, and this makes us really unique. And so we went out and we had a target to raise funds, and in 18 hours after we released the offering memorandum to about 600 or 700 eligible brokers at Lee, we had raised our goal. We left it open for 36 hours. We were 150% of our goal, and after 10 days, we were almost 200% of our goal. And we had to finally shut it down because, there's a cost to raising or over raising capital, because if you can't deploy it quickly, it diminishes returns. And so you make note that we've opened 3 offices recently. And so I think that also makes us unique, is that we have capital that is specifically allocated for growth and for expansion. So expanding during a pandemic may seem like a risky move, but that capital was raised, it was asked and answered, and it wants to move into these markets. And what we're finding is, in places like Boston and DC and Naples, is that we're able to be a really welcome platform, because we actually are growing, and we're looking for more expansion opportunities, both West Coast, Midwest, and predominantly East Coast. But we're having really great recruiting success in a very turbulent time, and expansion success.
Congrats on that. That's awesome. That's really good. It sounds like too then, so from how you guys look at like strategic locations, if you will, if you're doing a lot of business there and referring it out, it's like, hey, let's figure out how we can get more ingrained into that market and drop an office in there or something like that.
So I think that's certainly a big part of it. So client service is the underpinning of everything that we're going to do, whether it's systems, resources, technology, expansion. And then I think the second level to that is we really believe in density. So if you take a look at where we have real density, and where we can take a look at what made Lee successful, and where we think that transitions us to greater growth and success. So Southern California, if you look at the map, we have incredible density, far more brokers and far more product disciplines than any of our competitors. And then take a look at what we're doing in Florida with 4 offices and more to be added, and what we're doing in Ohio with 3 offices, and Eastern Pennsylvania and suburban Philly with a few offices now. So we're going to create density. We're going to be very local and granular in a way where we can deliver not only services, but data, expertise, and market chatter to our clients to create great connectivity to what's happening on the street.
That makes a lot of sense. I didn't realize it like that, but yeah, you guys are very well positioned in Southern California, just where I operate. So yeah, I've noticed that. So very good. I guess that transitions then, and I was going to talk about this a little later, but I think we might as well now. Culture. So I know you brought it up a second ago, but building a culture is one thing, but taking that from Southern California to Boston or Florida, it's got to have some set of growing pains, I would assume, in some way, shape, or form. But why don't you talk about that in a second? Like, how does that work? How do you keep it alive from the Southern California roots?
So one of the nice things about being a privately held company and not being compelled to grow at a particular pace is that we had so much experience in Southern California, and so much connectivity, and so many brokers, and such density, and such proof of concept with our structure, that really is where our culture is leveraged. So I would say the top 5 most important things in our culture would be entrepreneurialism, and that would be 1 through 5. So, and then I would think it's collaboration. And so we're able to take a culture and a platform and a structure from Southern California and go to Pennsylvania, and go to New York City, and go to Florida and Ohio and Texas, and we're able to take that. And because it's so well supported, Matt, and it's so well led, and that's not me, it's so well led locally that, and we've allowed for nuances in individual structures that have really spoken to individual markets. Because what we realize, not only in the structure side, but in the client service side, what our presence needs to be in Miami, and what the client service required there and the product disciplines to fully service that market may be different than what they are in Seattle. We think they're going to be relatively the same, but we want to make sure that our Miami group, for example, gets to message to their market in a very specific way. Our Seattle group gets to do the same. They get to the benefit of a national, international platform, some concentrated corporate leadership, and then the ability to collaborate with lots of people that have been here, 20, 30 plus years that can help them understand the model. Our model is somewhat unique. It's somewhat revolutionary. It takes some time to understand, but for entrepreneurial brokers and leaders, they love the freedom, they love the flexibility, and they love the support.
Yeah, no, that's really cool how you guys have done that, and it can't be easy, but you make it look easy. I got to say that that's for sure. A couple, next question I was going to ask actually came in from a couple folks too. How are you finding like-minded agents that have the entrepreneurial mindset that Lee exudes, and I guess attracting top talent was a question that I had, so it kind of mixes together with both of those.
Yeah, so I think it goes back a little bit to where do most of our expansion and recruiting opportunities come from? And I don't think this is unique to Lee, but when we have deals that are moving around the country, they're moving around North America and literally moving around the world, we're able to make connections with brokers. And while every platform is not for every broker, we typically have connected through SIOR, through CCIM, through NAIOP, a handful of other platforms with entrepreneurial brokers, because Lee & Associates probably isn't going to refer a lot of business to a top 5 competitor because we want to make sure we control that business. So we've worked with a lot of independent firms and a lot of independent brokers throughout North America, and we've found that there's a number of like-minded people there that we can help, and we can help introduce our network, our company, our resources to them, bring them into the fold. They still get to participate and create the local presence and the local identity, but they get greater connectivity. The institutional clients today really want to see a large-scale platform. They really want to see identity and international and global exposure for certain types of properties, and we're able to give that now. We have through the interaction that we've had in some of those formats that I mentioned in conferences and membership, participation, sponsorship. We have a European affiliate now, and wow. They're an incredible group headquartered in London. We spend quite a bit of time together with them, and both here and in Europe, and we've seen quite a bit of business transact. So while you wouldn't think of Lee & Associates, or some people wouldn't think of Lee & Associates as an international competitor, we can service people all throughout North America, all throughout Europe, the UK. They have about 18 offices, 20 offices throughout Western Europe. And that's been a really successful engagement. And that's a relationship that came from an East Coast president through an SIOR interaction.
Wow. Okay. That's really cool. So is that, and I guess, if you talk about Canada and Europe both, like how is that how it all becomes, just through relationships? Hey, we've got folks, we met them through the different affiliates. I've got a friend, and that kind of how it spirals in. Or do they have you ever had them approach you the opposite way? I guess, hey, we'd like to join the Lee & Associates network, and what can we do to do that?
Yeah. So I would say, very, very few inbound until recently.
Okay.
But now, since our platform, we're trying not to make our platform a secret and trying to make some of the more appealing things a little more public about it. And, the way we deploy capital, the freedom, flexibility, the support, the collegial nature and collaboration, all those things are things that we talk about a lot more today. Our Toronto, I believe our Toronto leader was an inbound inquiry about Lee & Associates, formerly a top producer at a top 5 publicly held competitor of ours. And he's built an incredible identity and presence in Toronto, our second office in Canada. My theory is, Matt, that we're going to get more and more inbound inquiries, requests. We, have a couple that happened that way already, even in the middle of a pandemic. And, recruitment, again, has really been a hot item for us. We've been really successful. Yeah. But we've had to work extremely hard. We do have really good competitors with very good platforms for different kinds of brokers. But for entrepreneurial brokers, I think that we have found that that we have really a winning kind of recipe. And I think what we found, because we're so entrepreneurial, that we've really undersold the value of the business that transfers within our company. And that's a really incredible, robust pipeline of business that is moving around Lee and Associates in North America, back and forth to Europe. And that's been a much bigger part and a real driving force for our expansion.
Wow, that's really cool. Thanks for sharing some of those insights with us. That interests me a lot. I could ask probably 4 or 5 on that subject, but I'll keep on moving here because we're short on time. So we had a couple questions come in actually last night from the audience, and it's kind of in this realm, kind of more so on more individual broker topic, I guess. But like, what, from your angle, what are the main items that commercial agents must have to join a commercial agency? And maybe this, I don't know if this is someone from residential going into commercial or getting into commercial in general, but yeah.
Yeah, it's a great question. And I think there's diversity in the answer there, but I'll speak to my experience. So, and who we look for. So we would really like to hire young college graduates or people that have had other sales experience, whether it's real estate or not, after graduating college, 2 to 3 years in the business. We really want to have good students, right? We're not really looking to hire, very salesy people. We want to have great consultants. This has been a period of time, during a pandemic and a health crisis, where early on there wasn't very much sales activity going on. So we transitioned our role really to becoming from salespeople to really a high-level consultancy, like an attorney, like a CPA. We're managing that conversation between landlords and tenants and owners and lenders and all of those really difficult engagements that were part of the March, April, May, even June period. And some continue. I would say people that want to be in commercial real estate, I think, need to figure out a way to harness data, to portray data, to figure out a unique way to understand their market and to service clients and to be better listeners than they are talkers, to figure out, people that want to be in commercial real estate need to be solutions oriented. If you have a desire to solve problems, then I think you have an opportunity to be successful in this industry. This is an incredible industry with the ability for, outsized earning potential with zero capital, right? So where can you get into a business as a salesperson, hopefully get on a team with a great mentor, learn from that person. I would say your first 2 or 3 years in this business, if you are properly led, trained, and mentored, is going to be the equivalent of a master's degree, right? You're going to learn an entirely different language, right? Your vocabulary will change completely. Your work ethic needs to change completely. The 12-hour days, the 100 cold calls, the listening in on conference calls. And I think you have to have a really great balance of patience and aggressiveness, right? And there are times when your clients need you and want you to be aggressive, and there are times when you need to be patient with them. And I think you need to leverage not only the experience you get earlier in your career, but the experience of the senior brokers and the examples that are all around you in a vibrant real estate office.
No, that's great. That's a great answer. I see that, what you're saying, for sure. And you kind of answered part of this here, but kind of to piggyback off that one, is it feasible to have a generalist brokers in tertiary markets and specialized agents that focus in a specific specialty, i.e. retail, industrial, land, investment, et cetera? Or sometimes generalists compete with specialized agents? Thoughts on that? I know it's kind of a loaded question there, but yeah, thoughts on that?
Well, I would say, so tertiary market probably is the defining characteristic there. So when we look at markets and when we look at how we want to service the market, I think it's about density and volume, right? So it's about the density of the product type, and it's about the volume of transactions. So if you happen to be in, and I won't pick a market because I'll miss one, but if you happen to be in a market that has a real density of office space, if you're in New York City and you think you want to become an industrial broker, well, I don't think there's enough volume or density there to support that. If you want to be an office, retail, investment broker, I think, and by the way, let's not confuse New York City with anything remotely like a tertiary market, but in the larger markets, I think specialization is required. in the more rural suburban markets, I think you can manage with accommodating, client interaction with a couple different product types. So you could be office and industrial, or maybe your office and retail. And it really depends on, is there enough density to support a pipeline of transaction volume? I'm a big fan of specialization. I think it suits clients really well. But again, if you're in a small market, I think being a generalist is fine. I mean, we talk in our recruiting activity. We talk to lots of generalists in smaller markets, while we're predominantly focused on expansion and recruitment in larger markets. We recognize that markets operate differently. So I think So the answer is yes. In smaller markets, you could definitely be a generalist. I think in larger markets, the trend and the demand is for high-level specialization, team interaction, and really harnessing tremendous amounts of data that you filter for your client and figure out a unique way and inefficiency in the market where you can add value to your client.
Yeah, no, that makes a lot of sense. We obviously here at Crexi work with brokers across the whole country, so we see that a lot. Someone in Los Angeles, maybe retail in this little area of the world, but a lot of folks, when you get outside of that bubble, are jacks of all trade and masters of all trade, I think, feel like too.
Right.
But yeah, no, that's good stuff. I mean, to keep on cruising here, I'm trying to think. I lost my train of thought where we were going next. So you mentioned something on recruiting a second there, I think. We had a question come in, and I think it's just, kind of with what's going on today. Does Lee have an eye towards gender and racial diversity when they are going about recruiting new folks? Just because the industry is very dominant in one way or the other, it seems like.
Yeah, so it's an interesting question, and it's a challenging topic for commercial real estate in general.
Right.
So we participate in commercial real estate, and for at least right now, the large group of commercial real estate professionals, unfortunately, looks a lot like me, middle-aged white guy, been in the business for 20 plus years. So I think the industry as a whole has a real challenge ahead of it to start to look different, to start to be accommodating, to start to provide education and opportunity to minorities, people of color, and women. And I think that's important because I think we've always been an industry, and I can tell you that for sure Lee & Associates is most definitely a company that's focused on the best talent. And I don't think we've ever cared very much about what gender, what color, but I do believe that we can do a better job of representing a better, more diverse environment. And because I think people want to go to work for a company that looks like how they look, right? So at Lee & Associates, we've recently, we're seating right now, and we're accepting nominations for an advisory board that is specifically going to be diverse in all the ways that we're talking about. It's going to be diverse, gender, color, race. It's going to be diverse by age. It's going to be diverse by region, so geographically diverse. So I'm hoping that will allow us to not only represent in a visual way that we are very diverse, but I think it's going to help our board of directors, and this group will sit alongside our board of directors and advise us of where we can participate, where we can educate, where we can inform people that are, in college, in high school, graduating college, about what the opportunities are in commercial real estate. Someone told me that there are 36 job functions within commercial real estate, everything from broker to property manager to real estate attorney, and obviously about 33 other things in between. And I think there's a lack of understanding about how diverse and how broad the opportunity is, because I think people typically think of real estate broker, property manager, that's the end of it. So I think we as an industry have a huge challenge ahead, but as a company, as leading 1,300 real estate professionals across North America, we are committed to do that. So by the beginning of in September, we will have that group seated. We'll start to be very active with them. And I think, so we're doing some things this year. We're participating as a sponsor in Crew Network. First year we've done that, and we made that decision last year. So I think it comes down to education and informing people about what the opportunities are. I know that our leadership is looking for the best talent, and it comes from any one of those buckets that we're talking about.
Yeah, that's a good point you bring up too. I didn't even think about it. I've been in the quasi, tech commercial real estate space for 8 years now. And I just thought, like you said, it's property management, it's sales, it's lease, and that's it. And when you start seeing how many functions are out there, that's can give you a very broad, diverse product pool, or not product pool, people pool to pick from when you're looking to bring people on board. I can only imagine. That's no, that's really cool. Another question came in kind of right after that. Do you see a shortage of commercial agents coming forth, like maybe in the offices you're currently working at, in attracting new people, or is it pretty free flow, people looking to get in the industry still?
So I think it's going to be pretty free flow for Lee and Associates, right? I think we've been, as you get into the mid-March period, we're 3% unemployment, and there's a lot of challenges to grab talent, whether it's coming from other companies or it's leaving, secondary education. I think most of our competitors are not going to be in a hiring mode now. And we're seeing constriction in some of our service lines, and, there are product types that are transitioning, and there are others that are having a really robust season right now. But I would say that I think we're going to be very successful in bringing in new people. I know we are adding people. College graduations took place in May and June, and we're adding a number of people all over the country. We've been, I think there is going to be disruption in some of our publicly held competitors, where there's going to be some talent that, is kind of early trajectory, mid-level trajectory that we should hopefully become a really welcome landing spot for that talent. So we're actually seeing maybe a little more free flow than we were Q4 and in the early parts of Q1. So that's encouraging for us, and it gives us a really great opportunity to grow and, round out the second half of the year. And then we're very hopeful for a strong fourth quarter and a really strong 21.
Yeah, no, that makes a lot of sense. I'm sure other brokerages wish they had that same, growth trajectory of what's going on for you guys. That's for sure, because it sounds really strong. I was going to ask kind of about the business plans for Lee, and if it's changing or realigning mid-year with what's going on, but it sounds like not so much, maybe a little bit, but for the most part, just pushing on ahead and growing and expanding. So that's good. Any markets that you see maybe that are outperforming or underperforming with what you may have thought, and the ones that you guys work in?
Yeah, it's a great question also. So, number one, I think, and this won't be revolutionary, but the industrial product type, e-commerce fulfillment, third-party logistics, the amount of absorption and interest and new requirements, even in the last 3 months, has been massive. So the Inland Empire, which is obviously of no surprise, very active Texas markets with Dallas and Houston, Lehigh Valley, Eastern Pennsylvania market, very strong. More port-centric markets also, the South Bay in Southern California, Seattle, really strong market. I think that some of the weaker spots and the more challenging spots would be, places that are more reliant on industrial and office transactions. So some of your larger metros, CBD, LA, New York, San Francisco, some of those metros, and there's, even in, if you take a look at Houston, and so you've had in April and May, you had some real disruption in the oil industry. And so Houston's a market that's really reliant from an office standpoint and industrial services standpoint on oil. While that's recovered substantially, I think there may be a lingering effect there for office, but we are seeing a more steady flow. I think we're seeing really good traction in the multifamily side. We've seen really good reports of rental payments, in that high 97th percentile. People were worried about that, and there are concerns as stimulus and PPP loans kind of exhaust themselves in this period. Hopefully, maybe another second round of stimulus that will help small business and will help people that are challenged to find work in this period to continue to pay rent. But a lot of multifamily activity is supported by Fannie and Freddie loan participation. And so the government's been and continue to be very aggressive there. They've been very aggressive still as they're kind of winding down their PPP integration. The SBA has been really aggressively financing owner user purchases as well. So those have been some of the strong points.
A lot of good stuff on the capital market side. You are seeing some good stuff from in those sectors.
Yeah, so capital markets wise is going to be interesting, and I'm actually very enthusiastic about the second half of the year from a capital market standpoint. There's an entire tranche of capital that we as a company really like to work with, have great connectivity to it, and this opportunity capital has been priced out of the market. So if you're in California or New York or the Southeast in Atlanta and in Miami, opportunity capital is not going to dip down and buy a 4 or a 5 cap deal. They want to buy vacancy. They understand repositioning. They want to get back to acquisitions that are at, near, or below replacement cost, and they can accommodate deferred maintenance. They can accommodate some of the vacancy risk, and that capital I think has built massive dry powder, and I think they're going to be very aggressive in the second half of the year because they don't think we've seen yet where distress is going to kind of take hold. But I think there's going to be some level of distress that will be met with really efficient buyers.
Yeah, no, that makes a lot of sense. And just to, I guess, kind of piggyback off that from the segment we had earlier with the poll, we had 18 people answered yes that they have had acquisitions supported by financing since April 1st. So I think that's positive to see. 30 said no, so it was 63% in the favor of no versus 38% in favor of yes, but in any event, we did see some good stuff from that, so that's good to know.
Yeah.
No surprise there, I guess. And I guess to continue on with, I was going to kind of talk about looking in the crystal ball kind of and what you see in the next 5 years, and the same question came in from the audience. Where do you see Lean Associates, 2 to 5 years down the road, and what would you say your breakdown in Q3, Q4 actions are to get there? I know that's kind of a loaded question already, so we'll pause there and see what you think about that.
Sure. So I think the most important thing that Lean Associates has on its roadmap right now, so in the real near term, Q3, Q4, is really supporting our agents and their client interactions. So we are developing and we're implementing new systems right now that are going to be helpful in the data gathering and some of our back end functionality that's going to help portray the size and scale of Lean Associates and gather and harness market data. So I think that's the most important thing. We want to grow, we will grow, we are growing, but we want to support our brokers. I mean, this has been a really challenging time, so we want to make sure that they feel that there is a real focus on assisting them, providing them with information, and to that end, we've been very focused on training. We've been doing quite a bit of remote training. We're producing an incredible amount, more than any year before, an incredible amount of research. So on a weekly basis, we are distributing and releasing research not only to clients, but to our agents for them to distribute to their clients. We're trying to make sure that our brokers and our real estate professionals stay connected with their clients. I think the other engagements and other things that we're doing, so we've become more diverse. So you asked early on about, hey, was Lean Associates a niche company? Were you geographically diverse?
Right.
Did you exist in all these different product types? And so I think we've had a larger push in some markets where it's important for asset management, facilities management, properties management, lease administration, treasury work. And I think that's been really helpful. And I think that's going to be more helpful as we see properties transition into special servicing and then in some level of distress. And I think that makes us a really great landing spot and a very welcome place, because not only can we service some of these administrative functions, but certainly we can do the leasing and the sales and the dispositions of some of those assets. I would also say that, as our markets begin to open and transaction volume starts to return and requirements start to return and become more robust, that's going to be the trigger for us of let's get back onto this connectivity and the expansion train and the track that we've been on. It's been hard to connect with people. Everyone's kind of been focused with, hey, I've got this pipeline. I need to focus on making these transactions. And then by the way, I am a little bit frustrated with my current either independent integration or the integration I have with a really large, multinational brokerage firm. And maybe I need a little bit more autonomy, a little bit more flexibility, and maybe even a little bit more support that I can drive locally. So we're starting to engage in some new expansion conversations that I think are that not only will be meaningful, but they're going to be exciting. That 2 to 5 year window, Matt, I think looks like 20 to 25 new markets that we see as being
okay.
Yeah. So maybe grow the company by a third again.
Nice.
And so they're predominantly East Coast, Midwest, handful of West Coast markets that we really feel will be important. So we're doing business in those markets. We're referring business into those markets. Our clients are asking us to be in those markets so we can provide the same level of service seamlessly and provide that single point of contact that's important to our multi-market clients. So I think expansion is going to become, it continues to become a really important part of our roadmap. And then I think there's, the exposure of what all the good things are that are Lee & Associates that I think we've maybe historically not done as good a job as we're trying to do now, to talk about the type of broker and the type of team that we can support and help thrive. So I think there's some messaging, there's some education, there's some information, and I think that we are finding that there is a real growth in the entrepreneurial market segment among brokers and teams, and I think we'll continue to grow with that group.
Yeah, no, that's really cool. That's a great vision to have long term. I mean, 20 to 25 markets. That's 5 years. I'm excited for you guys. That's for sure. We had another question come in too about just local office remote working. Is that a decision that's made on the local level, or how do you guys go about that? That's probably different, I was assuming, from location to location.
Yeah. So, in March, every one of our offices went remote, right? And so most of the leadership that was provided for work from home strategies was provided locally. And I would tell you that without the massive top-down directive that some of our competitors have with substantially larger budgets for technology than we would have, we did an incredible job. So I give a lot of credit to our local leaders, their IT professionals, in establishing work from home strategies. And work from home is not as big a deal for an agent, right? But take an administrative person, take an office manager, take a property management group and put them at home, and then figure out how to manage them, how to create connectivity, how to get people out of an isolated state and still bring them and deliver culture and support to them. So our group, we did an incredible job, and literally that was largely led locally, and I give a lot of credit to our local leadership. Now, as we transition back, I think we're in various stages of getting back into offices. So where it's safe and where it's allowed, you would see Lee offices that are partially staffed. You would see offices that are fully staffed, some offices that are just agents with staff working remotely, some rotational component of staff and agents to allow for distancing. All of our offices have some level of PPE that's available on site, temperature taking, hand sanitization. So kind of all the standard things. But we want to continue to provide a safe environment that builds confidence not only in our brokers but in our clients, and we're hoping to be a leader in that environment.
No, that's great. That's great. And I know you obviously with growth, you guys have a magic formula. I'm sure you can't share all the secrets of how the sausage is made behind the scenes. But from like a technology standpoint, is that a big part then, for you guys and other firms may have bigger budgets from this, but now we're going to go, full throttle on that stuff because, you may have to with the work remote and just other things along those lines. And I guess my question would be like all aspects, marketing and other stuff like that, technology and all the above.
So I think, marketing and data and technology to me really
data, I should say data.
Yeah. No, that's great because I came from an environment in the LA Central office and at Lee & Associates where, data was the thing, right? And data was the way that as a younger broker and as a maturing broker that I could differentiate myself. If I had better, more consistent, more relevant data, then I could be a better value to my client. So we are doing some things internally with data and harnessing data and reporting, not only to office leadership, but back to brokers and allowing them to communicate internally. Those are some really important things. Harnessing data, market data that exists, and being able to incorporate that into what we're doing is incredibly important. I mean, we're in two businesses, right? We're in the people business and we're in the data business.
Right.
All of the other things transition out. Product types transition from being attractive and unattractive, and where there's momentum, and financing changes, and lease requirements change, and occupier strategies change. But people and data, and that's how we can make connections. And someone told me that was conducting training for Lee in May and June. They said real estate brokers will continue to get paid. Commercial real estate brokers will continue to get paid based upon the size of the solutions they provide and the problems they solve. So we think with more data, we can solve more problems, and we can provide better resources to clients. So we're doing some things internally. We think there's great external data that's out there that we can acquire, incorporate in our story, and incorporate in our evaluation and advice for clients. So we are transitioning an internal data platform to something that will be company-wide by the end of the year. This is an interesting time to try and incorporate new technology, but it's been good. I mean, in some respects, it's great because our administrative staff may have a little bit more time, and our agents, while they're keeping their pipelines together and they're out working on new requirements, it's a little less robust for some than it has been. So it's not been a terrible time to do that. And I think the advent is just going to be more information, better information, more current, more relevant.
Nice. No, that makes a lot of sense. That's for sure. I know we had a couple other questions come in here, kind of on different topics, but I figure let's get into them. Let's do it. So how do you feel about short and intermediate term rental payments after stimulus, specifically as it relates to apartment building owners? So I know this is a pretty specific one there.
So I've been watching really carefully the reporting that the NMHC does, and so June was a relatively stronger period, I think, than May. I have heard some anecdotes about July, but still pretty strong. I think since May and June, I've been most concerned about August and September. So I think you're going to see, $600 a week stimulus from the federal government rolls off now. I think in certain parts of the country, you're seeing eviction moratoriums come to a conclusion this month. I think you're going to see some challenges. I think that is where we will start to see maybe the first signs of distress, where we've seen really robust participation and really high percentages of rent payments. So I think you're going to see that tail off, and maybe it tails off, Matt, for an August-September period until the next round of stimulus comes in. But we're also seeing some pretty robust job adoption and return to work. But I think this is going to be a period that really tells a great story about the strength and the resilience of the economy over the next 60 to 90 days.
Yeah, no, that's a good answer for that, for sure. Do you think, and this is, I think maybe we were talking about last week, just regarding different legislation stuff that could be coming down the pipe, and that could be California based or that could be outside of here based. Like how do you think that's going to have an impact on the CRE world?
I think, I don't think we need any more rules personally. And there's a lot of rules and there's a lot of legislation. And so for the people in California that understand what split roll tax legislation is, where they would take California commercial properties and remove Prop 13 property tax increase protection, and now start evaluating properties, I think, on an annual basis based on current market values. I think that that could be very damaging, and it could put a lot more cost onto the tenant, and in rollover that will put a lot more cost back onto the landlord, because we won't see growth. We won't see as much rent growth to accommodate all of the new costs for properties that haven't traded in a while, that are going to have an elevated property tax assessment. I think there's been other complications, so everyone should vote no, I think, on Prop 15 if you're a commercial real estate professional. There's been other legislation around affordable housing, and I think it's had a negative effect, because I think when you start to put moratoriums on market rate housing, I think you stymie development in general, and I think what you have is you generate scarcity, and scarcity raises prices. So I think while you'd like to see more affordable housing, it needs to be incentivized along with market rate housing. And because you need those same developers to participate and just to provide a component of low and moderate income housing. And I think they've been doing a good job of that. But when you start legislating rent controls and you start taking the incentive out of real estate ownership and property development, I think you're going to have a rebound effect. And I think you're going to go in the wrong direction. I think you'll have less development. I think you will have higher rental costs, although they will be managed on the upside. And I think you'll see properties trade less, and it's going to have a diminishing effect on property values in certain markets.
Yeah, no, definitely. I could see that, especially in California, but I'm sure in other places as well. Another question. Or New York, California, New York, probably with just the housing crisis, right? Of not enough housing, and then let alone build more. And yeah, no, that makes a lot of sense. Another question came in kind of different topic, but just kind of similar. Are you anticipating large changes to the industry due to artificial intelligence, other tech innovations on the horizon?
Yeah, this is interesting. So I think AI and some of the other technology that has been around and not largely adopted by commercial real estate brokers, virtual tours is something like that residential brokers have been doing for years. So
yeah.
Now we've adopted as an industry, technologies like Matterport and, drone flyovers to get an idea of what services and amenities exist around different buildings and in neighborhoods and in submarkets. So I think technology such as that allows us to participate and kind of, maybe help with site selection and limit interaction among people, because not many people have wanted to get together, or it's not been safe to do that. I think that's been helpful. I think AI is going to be extremely helpful to brokers, because it's going to put a fine point on who are likely candidates and what does migration pattern look like, and where are population centers that can support expansion. And I think that's going to be extremely helpful for brokers and owners, and it's going to be helpful for site selection for developers. And I think it's going to be helpful for economic development people to attract development. So I think more data, more AI, more technology is going to make a more efficient market. I think brokers will continue to do a really good job of marrying some inefficiency with capital that meets that inefficiency, and then creates opportunity.
Yeah, absolutely. And not to plug Crexi here, but one of the cool things that I've watched take place over the past 5 years here is just how our engineers work with AI on how we're doing that with marketing, and I guess, for lack of a better term, kind of matchmaking, almost like a dating site. But we see everybody's activity on the site, what they're looking for, and putting the most likely properties on the sale lease side in front of them. And it's really cool just how that's kind of changing everything slowly but surely in an industry that's kind of been the opposite of looking at change like that.
As an industry, I would say this. My comment about technology is we have woefully underspent what we should have over the last 10 years. I think we are, and again, as an industry, we are making inroads into, more VC exploration and more, prop tech startups. And again, some will succeed, some will fail, some will be acquired by other existing firms that operate in the space, but we need more technology. And I think, brokers that are, new to the industry and been in the industry for, 10 years or less really want to utilize more technology. I would say the downside to younger brokers only relying on technology is that they need to exercise their communication muscle too. And I think they need to get out and they need to build relationships. Relationships are largely not built through email, text, and Zoom. Very, very challenging to do that. So where and when it's safe, be out in front of your clients, be with your clients. And, we're trying to make sure that our brokers and our professionals are out meeting with clients and building relationships, because again, I think that's the heart of how you build trust and how you grow your pipeline.
Yeah, no, that's for sure. It's I didn't grow up with internet my whole life, so it's different for me. I'm used to having to do that, but so it's different thinking about that, just getting into the working world and only having virtual stuff going on. That's you've got to definitely break through that barrier. We're coming up on time here, so I just want to ask a couple other things real quick. Knowing what you know now, what would you have told your younger self today? I know that's a tough question to ask, or to answer, but.
Yeah, that is a tough question. So I think I would have paid a little more attention to some of the successful examples that I worked with. So if I was a newbie broker, I recognize some of the great examples and some of the business plans that existed in kind of the micro environment where I was. I think I would have paid a little more attention. I think I would have gotten more exposure to other successful brokers. And I think I think there's so many great examples. So I waited far too long to become involved in SIOR, for example. I think that's a group that does an outstanding job in educating, in promoting education, in promoting community service, and collecting a really high caliber broker. And I wish I would have done a little bit more of that, a little more industry involvement. In my current role, there was on an awful lot of airplanes and involved with quite a few really interesting industry engagements. And so I think if I would have rolled it back, I would have done a little bit more of that.
Okay. No, that makes a lot of sense, especially someone like myself. I mean, I try to get involved in as many of those things as I can, so I will continue to do that as much as I can. You mentioned, you guys have opened, you're looking to expand into 20, 25 offices. You have over 60 now. Are you traveling all over the place then to those places when you can, when it's obviously safe to and whatnot? Is that, yeah?
I was. So
you were, yeah, that figured.
I was, and that was great. And, it was really a great engagement. And, for me, the opportunity, it's not just about expansion. So it's great to have a new flag, but the real opportunity, Matt, was to find someone and to find a group, and whether it was a team from another firm, or it was a small independent firm, or 2 or 3, teams of brokers from different firms, that our platform resonated with. The great part about my job is that exposing them to a platform that changed their life, that they found that really resonated with them, that gave them the opportunity to exceed their production, to give better client service that was kind of unfettered from a top-down organization, that allowed them to service clients the way they wanted, to get support, to have national presence or international presence. So that's the great part about my job. So it wasn't just about, going to open another market, and that was the mission. It was finding great professionals and bring in people to the company that make us better. And that's really the goal, is that we're going to grow and we're going to get better. We're not just going to grow for the sake of, Jeff's job is to go and, find the next 20 markets. It really is. My job is to go and find the next 20 groups of people that elevate Lee & Associates.
Yeah, no, that's a tough job right there. It doesn't sound easy by any means. Well, I always ask this, Jeff, so a little bit just not business related, but, I'm just curious, if you do any reading or listening, are you a physical books guy, or like I would say book on tape, but like an audio guy or podcasts? Anything in particular that you're listening to right now?
Yeah, so I love that podcast of How It's Made. And it's a podcast. The guy's name is, I should have written it down, but I think his name is Guy. And
How I Built This. Guy Raz. That one's great. I listen to that too. Yeah.
So I listen to Guy Raz because he talks to people who, in the latter stages of the maturity of a company, about what it was like in the beginning and what it was like in the middle, and what the things were that changed it. So for me, the podcast was one, and sorry to disappear. And,
no, not at all.
And I'm reading this book, Small Data, right now.
Okay.
So I think that's a really interesting concept for commercial real estate, and how to understand data and how to utilize data and how to use small data to make big decisions.
Very cool. Very cool. So still doing I'm a physical book guy myself, but I'm listening to something all the time. I do both. So I'm always just curious to find out what, what you'd be looking at from that side. We had people ask to contact you directly. So we'll,
Please.
definitely give you the contact information. Or I don't know if you want to say what the best way to get in contact with you is.
Sure.
We can give you
Just
their info too.
send me an email. It's JRINKOV at lee-associates.com. It's JRINKOV at lee-associates.com, or go to lee-associates.com. You can find me on the website, and just send me a note and give me a minute, and I promise to get back to you.
Awesome. Well, that's we really appreciate the time, Jeff. We've been going for about an hour. It doesn't feel like that. That's for sure. Any last minute words you want to say to anybody out there? Or I know we covered a lot today, so yeah.
Yeah, so I would, number one, Matt, thank you for the opportunity, and congratulations to you, and congratulations to you and your team at Crexi. You guys have done a really great job. And so when I hear you talk about the things that you're doing with AI and better market penetration, more data continues to make you guys a really valuable resource. And so thank you for all the work that you've done and the participation with Lee offices. So we appreciate that. I would just tell you that I'm really excited about Lee. I'm excited about what the second half of the year brings for commercial real estate in general. I think we are going to see a robust exit from this. I think it's going to require some help from health professionals. And so, again, I think we are more than cautiously optimistic about how this resolves and how we move on. And I'm hoping that, next time we talk, Matt, that we can come back and we can talk more about how great things were on March 1st than they were on, August 1st. So I'm looking forward to that. But it should be a really interesting time. And I think we're going to see some great things and some really a rapid return to transaction volume and velocity as the year continues.
Awesome. Well, I couldn't agree more. I'm in the same boat as you. Very, very bullish on the rest of the year, and for everybody. And thanks again, Jeff, for the time. We really appreciate it. This was great. Had a lot of fun today. We'll get this up on our YouTube channel, so everyone who missed it or came late, they'll be able to watch it. But yeah, thank you everybody for joining. Stay safe and be healthy out there. That's for sure.
Thank you, Matt. Take care. Everyone be safe.
Bye.
Thank you. Bye-bye.
Thank you, everyone.